Guys, I know we all want 3% interest rates on our HELOC again, and everything was looking great. Inflation was slowing, the economy was chugging along, and unemployment stayed steady and pretty low. And the pipe dream of a soft landing was becoming more and more likely. But not so fast, because inflation has reared its ugly head yet again after the most recent economic news, and we may be looking at a higher interest rate environment for much longer than we anticipated, and maybe rightfully so. Let's get to it. What is up, everybody? Welcome back to the channel. If you didn't already know, my name's Jay Costa. I'm a real estate investor, agent, and builder here in Northern New Jersey. And if you get value after watching this video, please smash that like button down below and also consider subscribing. We are slowly building a tight-knit community here of like-minded individuals looking to build wealth, specifically in real estate and specifically using HELOC. So if that interests you, definitely hit the subscribe button, smash that notification bell, and also consider if you're into Discord. We just started a new Discord server. If you want to check that out, I'll put a link in the description box down below. But in this video, I'm going to go over with you where HELOC rates are today after the most recent economic news and the most recent Fed meeting, along with where I think HELOC rates are projected to go from here. And we'll go over whether or not it's a good time or a bad time to use that home equity using your HELOC in order to build wealth. So first, I need to explain to you how interest rates on a HELOC are calculated. And in order to do so, you need to know three main terms. Number one is the federal funds rate. The federal funds rate is the interest rate that is set by the Federal Reserve every time they meet at their FOMC meetings. This is the rate at which banks lend money to each other, between each other, and when you hear on the news that the Fed decided to raise interest rates or lower interest rates or keep rates the same, this is the rate they're referring to. Now, the number two term is the prime rate. The prime rate, very simply, is the federal funds rate plus 3%. This is considered more like the consumer level interest rate, where the prime rate is the kind of commercial or bank level interest rate. So if the federal funds rate is at 5.5% like it is right now, that means the prime rate is 8.5%. But that does not mean that you get your HELOC rates at 8.5%, at least not most of us. That would be too risky, and the HELOC lenders need to make money somehow. So what they do is they add a bit of a margin or a spread, and that's our third term that you need to know, the HELOC interest rate margin or spread. Now, this is a predetermined amount of interest rate that they add on top of your prime rate, and once again, that is how the HELOC lenders make money on the interest that you're paying when you take money out of your home. Now, the margin or the spread on a HELOC interest rate is a predetermined amount determined by you as well as the lender based on your credit history, your income, your LTV, among other things. Basically, however strong your application is. And the stronger your application is, the less risky it is, the lower that margin is going to be. And the more risky your application is, the higher that margin is going to be. And generally speaking, the lower that margin is, the better. Like I said, it does vary depending on the lender as well as your application, but generally speaking, I would say the most HELOC interest rate margins are anywhere from 1% up to 3%. So that means that if the prime rate right now is 8.5%, that means most HELOC interest rates are currently on average at probably about 9.5% to 10%. And frankly, this has not changed since August of last year, 2023, because that was the last time that the Federal Reserve decided to raise interest rates. Since then, they have stayed at the same level, and frankly, that's why I haven't been making as many videos like this giving you the HELOC rates, because back a year ago or 2 years ago, the rates were changing almost every time the Fed met, and now they've been steady for a while. So the prime rate set by the Fed has not changed since August of 2023, but what has changed is the outlook on the economy and on interest rates going forward. And that's what I wanted to go over with you today. So the last time I made one of these videos was back in November of last year, 2023. And at that time, everything was looking peachy. Inflation was slowing, unemployment stayed low, and the economy kept chugging along. And because of that rosy outlook at the time, the projection of the next Fed rate cut was for May or June of this year, 2024. And here we are, almost May of 2024, and there is no rate cut in sight. Because after a bevy of negative economic news, like inflation showing itself to be a bit more sticky and stubborn than we thought, as well as the economy slowing and some major job loss announcements by major companies, that outlook has changed dramatically. So as of now, according to the CME Fed Watch tool, which is the tool that we use that shows the probability of Fed rate increases or rate cuts in the near to midterm future, the next probable rate cut that it's showing is not until September of 2024. And that is at the very earliest. Now, keep in mind, this is not a crystal ball, of course. It's simply just a tool to allow us to give us more information so we can make the right decision on whether we should use our HELOC now or not, and what we should use it on or not use it on. That being said, in my opinion, it's safe enough to say that we're not going to be looking at any higher interest rates than right now, but it's not going to be going lower anytime soon, because the Fed is going to want to continue to keep credit tight and slow down the economy. Now, I know I probably sound like a broken record because I've said this multiple times on this channel that in order to combat inflation, we need to have higher and elevated interest rates in order to slow the economy and keep credit tight. But I think we're in a different position right now than we were even 6 months ago. The higher interest rate environment has slowed down some parts of the economy, but not nearly enough. And not nearly enough in the right areas. For instance, if we look at the most recent CPI report, which shows the inflation, it shows an annual inflation rate of 3.5%. That's almost double what the target rate is of 2%. And if you dig even further, it shows specific areas that are like getting killed by inflation still to this day, even with higher interest rates for the past year or two. Like baby food being up 10%. Electricity, which is so important, right? How do you light and cool your homes? That's up 5% compared to last year. Motor vehicle insurance up 22%. I feel that for sure here in New Jersey. In addition, I think the markets and the country as a whole were way over their skis, as they say, in regards to getting potential rate cuts, because you saw the stock market just shoot since the beginning of this year, and thinking that the worst of it was over, and it always seemed a bit too good to be true. And because of this hotter than expected economic news, I wouldn't be surprised if we have these elevated interest rates for a good bit longer, maybe even another year or so. I see it in real estate every single day. With higher interest rates, prices are still going up in a lot of areas, and buyers are having major affordability issues. And I think we need to stay at these high rates for a good bit longer in order to just keep that credit tight and to keep everything from getting so expensive and outpacing people's wages. So is it the right time for you to use your HELOC right now with these higher interest rates and for a longer period of time than we expected? Well, I would say it still can be a good time to use your HELOC as long as you're not depending and relying on rate cuts coming soon, because I wouldn't expect that at all. Whatever you're using your HELOC for, underwrite that investment or whatever you're using it for based on the current interest rate, not on anything lower. And of course, as always, you need to follow my 4 main HELOC rules. Number 1, it must be short term. Number 2, you need to have a clear exit strategy. Number 3, never over leverage and take money out of your HELOC that you can't pay back from somewhere else. And number 4, never use your HELOC on something that doesn't make or save you money. That is it for today, guys. Thank you so much for watching. What do you think about the economy and the most recent Fed meeting and economic news and inflationary news? Do you think we're going to be headed into a recession? Do you think interest rates are going to stay put? Are they going to go higher? Or are they going to get lower very shortly? Drop a comment in the comment section down below. I would love to start a conversation with you guys as always, and I will see you next time.